Okay, welcome to today's natural gas weekly outlook. Now, let's jump right into the chart here. And you can see that we are still currently on this active trade. We are going to be talking about these open gaps that are still down here. But before we get to that, congratulations to all of you on the YouTube community and, of course, our members in our private community who began selling after we had this open gap that was created last Sunday. And then we saw price head up to this 4.99 level, and we saw the rejection and we began taking our sells. And as you can see here, we have hit several levels of profit, and we still have one more level at the bottom. For me personally, I've already closed at this level, and we're going to talk about possibly getting a retracement and then more possibility down. But the fact of the matter is that on Sundays, natural gas loves to create these pretty substantial gaps that you could take advantage of if you watch to the end of this video, because we're going to give you different scenarios to look for. So before we get started, I want to kind of go over the top headline news in what's going on with natural gas so you are prepared. Okay, so here are some of the fundamentals that you should be paying attention to when it comes to natural gas. Number one is mild weather nationwide, reduced heating demand this week. And of course, as things begin to get warmer, we should see the price of natural gas begin to decrease. Natural gas storage decreased less than 5 year average. Okay, so the storage has decreased less than a 5 year average. The Pacific region, of course, we're talking about in the United States, saw cooler than average temperatures. Again, that's why we're kind of hovering in this consolidated area. Most US regions experience warmer temperatures than normal this week. Again, that's what drove down the price of the need for natural gas. Gas inventories remain above a 5 year average. Natural gas prices dipped slightly due to decreased demand. Again, there's that word again, decreased demand. Weekly gas production remains stable, a slight uptick observed, so nothing really drastic. Exports stayed strong, supporting steady demand. And finally, storage withdrawals were below average for this time of year. So the need for it was much lower during this time of year compared to other years in the past. Okay, so what does all of that means? That means that's information, but at the end of the day, we trade what we see, but it's important to understand the fundamentals, at least what is going on, because obviously if you see temperatures starting to get warmer across the United States, then there's going to be a less of a need for natural gas, and that arbitrarily should begin to bring price down. And again, we still have two lower gaps that we're going to talk about in this video, and we're going to wait to see what happens with the Sunday market open as well. Now, if you're interested, we trade all of the gaps, both on currencies, indices, natural gas, and gold and crude oil live. So if you're interested, head up to theprofessortrades.com, check out our community, come on in and trade with us this Sunday at 6 p.m. Eastern Standard Time. So let's go ahead and get back into the charts. Okay, so we will be talking about these open gaps that are down here in just a minute, but let's go ahead and reset the entire chart. And if you did take this natural gas sell trade, either based from my Saturday analysis last week, or you're a YouTube member in the YouTube community, or you're in my private VIP trading community and club, head down to the comments and type in natural gas. If you took this sell, let me know if you're currently still in an open trade so I can guide you, or if you've already closed and taken your profits, which is always an awesome idea so you don't leave natural gas open over the weekend. Okay, so let's head over to the weekly time frame. Okay, let's kind of take a look at the weekly time frame. And what I wanted to do in this video is I wanted to add the 200-day moving average so you can clearly see here that on the weekly time frame, we are obviously still trading above the 200-day moving average. And I also wanted to bring in the 50-day moving average. So again, you can tell on the weekly that we are still way above that. As we drop down into the daily, here now we can begin to see that we are approaching the 50-day moving average, which is represented by the yellow line. And we are still clearly above the 200-day moving average. Now, as we drop in time frame, this is a very interesting time frame, in my opinion, because I love trading off the 8-hour time frame, and we have been consolidating now. If you take a look right here, right, we have been consolidating in this area below the 50-day moving average. But as you can see, we are still above the 200-day moving average. We see a slight bend to the bottom side, but again, as you know, moving averages are all delayed. And then we head over to the 4-hour time frame. And again, now you can see that these moving averages are getting a little bit closer together. But again, we are in this consolidative state when it comes to price action over the course of the last 2 to 3 trading days. So what does that mean? That means is we are going to head over to our daily time frame, and we are going to do our typical analysis that we normally do by looking at support and resistance. And then we're going to give you some opportunities to look for entries as we near the end of today's video. Okay, so that is going to be our roof there. And this is going to be our temporary floor, because as you can see here on the daily time frame, okay, we have rejected this area on a couple of occasions. So we clearly won't have a path down to this open gap until we don't see some price action below 3.92 on this, or 95 on this chart. Okay, keep in mind that I am using the natural gas chart from the April 2025 contract. So whether you're on Forex or whether you are in futures, make sure that you are looking at this. And the only difference between this contract and other maybe longer contracts, let's say the one in June, is going to be the price on the right hand side, but the price action should look exactly the same. So for me personally, I do not plan to buy or sell natural gas until I get a distinctive move. I need to see, right, price clearly come below this area. Okay. And you can see here that this is where we had an existing gap at one point, which was then filled and we went up to the top side. So again, barring any gaps, this was a Friday close, this was a Sunday open. We have to have price action basically give us a distinctive close, which I believe needs to be below this level. Okay. Once we get this price action here to the bottom side, which is at least a 8-hour candle to close below 3.76, then I believe we can target that existing gap that is sitting right in this area. So I am going to relabel this gap right here, because this is, again, this is an open gap that we still have in the market. Okay. So we don't talk about this gap until we begin to see this price action. So we are sitting here at 3.95. And so the question is, well, what can we anticipate, okay, moving forward? So let's head down to the 8-hour time frame. And now you can clearly see here, what I want to do here is I want to move this level, okay, and create another level right at this white line, because understand that levels are not an exact price, they're areas of value, okay, they're areas of supply and demand. So this is going to be a very interesting point right here in the market. And hey, by the way, if you are getting value on this video, don't forget to like the video for me, share this video with your trading community, and if you're brand new, subscribe as well and hit that notifications bell so you don't miss any of these videos. So we did end up on Friday with a bullish engulfing candle, but that is on an 8-hour time frame. Again, let me wipe out this chart and head over to the weekly. And again, you can see here that on this weekly candle from last week, we ended up closing in a bearish state. Okay. We did come down and grab about 80% liquidity of this candle. And that's why we have to be a little patient to see what is going on. If we head up to the monthly candle for March 2025, you can see when we began to sell at that rejection point near that 5.00, and we have been trending down on the monthly, but we still have half a month to go. So you're going to have to use extreme caution when it comes to natural gas, because natural gas, as you know, could be very tricky. And I think everything will be based on what's happening on the fundamentals. And of course, do we see any major substantial gaps that we could take advantage of right now? So in the meantime, as we drop to this 4-hour chart, okay, and we look at this 4-hour candle, it does appear, if you were to ask me on the technicals, based on what I'm seeing right here, right, a green bullish engulfing candle that closed above this price level, and then we saw a slick retracement down in the final 4 hours of trading, right? They could come down, grab some liquidity, reject again, and then head back up, because I do see unmet liquidity on this candle, and I do see some unmet liquidity on this candle. Okay, so based on these technicals, barring any gap that is going to happen on Sunday, right, it looks like we might get a push down and then possibly another bounce back up towards this area on natural gas. Okay, so here are going to be the scenarios that may or may not happen for the Sunday gap. So if you've never traded Sunday gaps, and let me explain to you in case you're brand new, okay, it's going to only take 30 seconds, what a gap is so you understand that. So a gap just means this. On Friday, price closed at this level, okay? Friday, price close. Okay, so that is where price closed. And for this, I'm going to actually head over to the 1 hour to make it a little bit easier for you to see. So we had price close on this red candle right here. Okay, so that being said, if on Sunday price opens up here, the difference, okay, between where price opens and where price closed, that's considered a gap. So this would be considered price has gapped to the upside. Okay, vice versa. If on Sunday price gaps down in this region, then same thing applies. Okay, where price closed to where price opened, that space in the market is considered the gap. So that's all that the gap is. But when it comes to gaps, understand that these gaps could stay open for a few minutes, for a few hours, for a few days, for a few months. And in the case of natural gas, it can stay open for a couple of years. So we're very judicious. When we take a gap trade, we have a strategy for it. Sometimes we just don't take it because it's not worth the risk. It's got to be a substantial gap to really take that. And then we let the markets move during the first few hours of trading, or maybe even into the next day as well. It's a very small lot size that you're anticipating to hold. And again, for the most part, natural gas within a week or so closes this. So again, you never want to risk your margin or risk your account if you're going to take a gap trade. In some cases, it's just best not to trade the gaps and let the gaps close and then move from there, or just base it on structure. So again, there's a lot of vulnerability when it comes to trading the gaps, but we do take advantage of this, and we're very successful in finding the right spots to take these gap reversals. So that's a little explanation on the actual gap. So we are looking at the 1 hour. We can see here, though, that we are still creating a lower low, a lower high, 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 a lower low, a lower high. So this is going to be a very key area. If they fail to go below 3.95, okay, and they reject, then they're not going to create a new lower low. They will then shoot up back up here somewhere to the top side. So this area is going to be extremely important to look at. Now, if price does come back in this area, it is a much better opportunity to look for a quick short-term buy with a low risk because you already know your exit has to be this white line, 3.92. Okay. Now, as we move towards the middle of the week, if price is still moving down, then of course we are going to consider this gap area. Okay. This gap area that's still open, but this does not happen until we get the price action below 3.70. In the meantime, we are trading off of this structure point. Okay. This is the key structure point. This doesn't matter until we see it. Doesn't matter what the news says until we don't see price action below 3.70. We don't even talk about that particular gap. We are focused on the price levels right now between 3.92 and 3.76 because we can already see here that when we came down to this price level of 3.75, we got to bounce back up. So we are currently still above the 3.95 level. So we trade as if this is where price is going to stop again and head back up until we don't see price close like it did over here. And let me make this a little bit smaller. Okay. Until we don't see price action, okay, close below it to head down to the next level. We stay bullish on this level. Once we break this level, then we sell down to this level. So trading doesn't have to be very, very difficult. What I have found is that with natural gas, same thing with crude oil, and that crude oil video will be out tomorrow on Sunday. So make sure you have your notifications turned on. Is that if you can discipline yourself to trade from level to level, you will be very successful. So if you are in a buy and it breaks your level to the downside, you close your trade and you switch your mindset to go from a buy to a sell, and you will begin to be much, much more prosperous. You take a quick loss if needed to, you flip your mindset, and then you take a sell, and you end up making more gains when you have smaller risks, especially with natural gas, which is very, very volatile and it could run for a long time. So small lot sizing, okay, longer trades like we showed you at the beginning of the video, okay, and you will do very, very well with natural gas. If you have any questions about natural gas, you have any questions about trading in general, you can head down to the comments, ask the question. I get back to all comments within 24 hours. If you really want to take your trading to the next level with less risk, or you're trying to pass a prop firm, or you're just trying to make a little extra money, head over to the website, come on and join us, and you can see the value. And here's the best thing about communities. If for some reason you don't like it, which we have a 93% success rate in people staying, but if it doesn't work for you, just cancel your membership. That's it. You have nothing to lose and everything to gain. And I'm extremely proud of what we're doing inside of our private VIP community. Okay, thanks for watching. Have a great weekend, and I'll see you tomorrow on our crude oil video analysis.